2.55% is what you can get on a GIC from Tangerine right now. And any other investment is going to make you less money than that and impose risk upon you. It doesn't make sense for you to buy it, okay, that other investment. That's the idea of the risk premium in a nutshell. That's something I want you to keep in mind as we're going through city by city and doing an analysis of each real estate market in this country. Let's look at the beautiful city of Victoria. The average for a single family dwelling out there is $498,608, and rents for a one-bedroom apartment average out about $1,000, $1,006, and for a 2- or 3-bedroom apartment, they average somewhere between $1,750 and $1,760. Rental yields on the low end in Victoria are about 2.4%, and on the high end, they're about 4.2%. So again, GICs on this date, September 16th, 2014, are going for 2.55%. The Royal Bank is offering a dividend yield of 3.6%. That means that if you are a landlord or if you have an investment property in Victoria, your yield on the low end is about 13 basis points or 13% of 1% less than a GIC. And of course, your rental yield is much, much lower than the shares of Royal Bank. You're being crushed by the Royal Bank to the tune of 1.18%. And so again, you are taking on all the risks associated with being a landlord, with owning property, with being assessed with street repairs, and all that hassle for less money than you would get from just parking your money in Tangerine's GIC, 5-year GIC. Far, far less than you would get by just buying Royal Bank and sitting on the dividends. Again, it's possible that the Royal Bank is going to be out of business in 10 years. Possible, but not likely in my view. Looking at the higher yielding stuff in Victoria's rental market, they beat the GIC by 1.66%. So you get a whopping 1.66% over the risk-free rate, and you beat the shares of Royal Bank by about 0.6%. That means that it has to be some combination of a cheap price and a high rent. So that's Victoria. Also, not a great place to be a landlord.